Hello everyone, this is Dave, aka DREBG. Today is Friday, June 25th, 2010. If you haven't done so already, I welcome you to come over to informtrades.com. I'm a senior member over there, and there's plenty of stuff that I go over and a number of other traders go over that's all free, where you can learn a ton of new information. What we're looking at is a trade I took today, which encompassed this run-up here on the Euro-Yen. You're looking at the 15-minute chart, and I'm going to show you why I get in this trade and how I held on to it. And in fact, these lines that you see on the chart show that I'm still in it. I entered right here on this candle, and I have now since moved my stop up to here for the remaining part of the trade, but I'll go into the detail in just a minute. But first, I'd like to go over to the daily chart and just mark it up a little bit with some support and resistance areas. The most important areas are probably the extremes. In this case, we have some touches up here, and of course the extreme down here. But where else do you put these? And now it becomes a little bit more subjective, but I think when you really take a look at things, you're able to find these areas that make a lot of sense, where we have some resistance and support here and here, and then it holds all the way through over here. And then again, down here, we can probably put something else here where we have some support and resistance areas here. And that gives us a good framework, at least to give us an idea of where price action might turn around. Now, a lot of times I like to mark off the previous day's low, which is right here, and I'll show you why I didn't do that in this case. Down to the hourly time frame, start to get a better picture of what specifically price action has been doing. And as you can see, we've been stuck in this range here for a while. Now, I've been working a lot with RSI, and I've become a big fan of it. It's really very telling of what price action might be doing and where we think things may be going. I think it's one of the best indicators for divergence, and in fact, that's exactly how I found this trade today. This is RSI on a 4-period basis, and if we look carefully, you can see that there's some divergence right here. And when we put it on price action in the same length, you're going to see that we have some bullish divergence here, and we have it at a relatively significant level. Now, you can't see the level just yet, but I'll show you what I mean. Now, I'm a big price action guy, and I like clean charts, but there's just a certain amount of things that I really like to use, and one of them is pivot points. I've placed these pivot points on here so we can get a better idea of where those areas that price may turn around and or pause a little bit today. And one of those areas that's very significant is this orange line right here, which, as you can see, is yesterday's low. Remember I said I'd get back to that later? I always put this up on my charts, so marking off yesterday's low with a distinct support and resistance line isn't necessary for me, as I always have it marked off. Here's yesterday's low and yesterday's high. Now, what's significant about this is that I had this low yesterday, and then I had this low here that wasn't quite as low at an area of fairly significant support. Add to that this divergence on a 1-hour time frame in oversold territory, this starts to make sense that we can maybe see something going long today. I saw this without having benefit of these candles that happened during the day today. I was right here when we saw this divergence, so I dropped down to a lower time frame, in this case the 15. I really wanted to make sure where the best entry would be. Now, how do you do that? Well, one of the good ways that you can do that, especially with RSI, is to put Bollinger Bands inside the RSI level. I'll show you what it looks like. I'm using MetaTrader here, and what you want to do is drag that indicator down to this area, and what pops up is just what you can put in for parameters. Of course, this is your standard 20-period 2-deviation Bollinger Band, but you have to indicate where you want the data to come from, and we want it to come from the price action data, but plot it down here. So when we click OK, now we're left with these lines that give us an idea of what these deviations may be relative to where price action is at the same point. I should mention that you can use deviation on pretty much any oscillator or histogram that you like. As a matter of fact, if I put in MACD, you can see that we'll have some divergence, but it is not anywhere near as easy to see. You have to draw on the histogram in this case. It's definitely there, no question, but I think it's more blatantly obvious when we use RSI. So we identify the divergence on the higher time frame, we drop down, we already have our support and resistance levels there for the day, we have our pivot points. Where the heck do you get in? Well, the nice part about putting Bollinger Bands on RSI is it gives us a good entry point, and that entry point is right here where RSI crosses Bollinger Band center line. Now, one thing we're missing here is a shorter time moving average. This is the 200 EMA that you see up here, but we need a shorter term moving average on price action to kind of give us some guideline about how things are moving. Now, I'm going to put in a simple moving average here. It will just be the 14 simple moving average, and we'll just plot that and leave it be. But I'm going to put one other thing on here, and when you don't use RSI, I've found this indicator to be very useful. When you don't want to have too much clutter on your screen. I'm able to use an MA that replicates what RSI is doing. So the period that we'll use for this is going to be 14. The method, I think this is SMA. We'll change it if we need to. The price is going to be on the close, and then the RSI period should match what you have down here. In this case, it's 4. And then what level do you want that MA to change color? And I said whenever it crosses the 50 of RSI. So what you're going to end up finding now is that blue line that we had as the 14 SMA is still there, and when you see blue, that's just because price action doesn't really have a clear direction at the moment. But this now shows us whenever the RSI is below the 50, it turns red, and whenever RSI is above the 50, it turns green. And it just kind of gives you a brief visual of where price action is relative to RSI. Now, as you could possibly imagine, this matches up where it changes, where I went long. Remember, we wanted to go long right around where RSI broke the Bollinger Band, and here's where it went above the 50. Well, lo and behold, this is where it changed from red to green, and the RSI starts going back up. So the next question is, where do we put our target? Well, the only way you can possibly put a target is if you first figure out how much you're willing to risk with money management and how far back that has to go. Well, in this case, if my entry is here, and I want to keep my money management in check, I probably want to put it maybe below here, or here below this low is probably okay rather than way down here. In this case, I put the stop loss right around 30 pips back. And if that's the case, and we're looking for 2 to 1 in most cases to try and get a good money management risk to reward ratio, that would put 60 pips right here, which would be 1 to 2 risk to reward. Now, I don't have a problem with this level here. That gets us right around the 200 EMA, just above it, but below the next resistance point. You see what price action did later on in the day, went right up to that point. What you end up doing is you actually enter the trade when we see that trigger on RSI down here, and we exit the trade with about 80% of our trade after the first few candles. And in this case, I exited half of the trade, or most of the trade, somewhere in here, 80% of it, and I got rid of another half of what was left here, and then I let the other part run, and I let that run as far as the 14 SMA would take it, which was up here. So when we put it all together, it's going to look like this. Here's where we saw the divergence here, and here's where the divergence was on the RSI. Here's where RSI crossed the center Bollinger Band, and here's where I entered. You'll see there's 3 different entries here. The reason is I closed them at different points. 80% of the trade was closed here. This was plus 20 pips. The second was plus 44 pips, and the third closed out at plus 55 pips. So you can see that we harness our trades. I'm sorry, this didn't close yet. I mentioned that at the beginning. This hasn't closed yet. This is actually still open because I haven't moved my stop loss up that far, but I intend to close it if indeed it's still open on Monday. But the point is, we close 80% of the trade with this movement as this RSI comes up and almost touches that upper Bollinger Band. And we grab a lot of our trade and we move our stop up to break even. And if it keeps going, great. We go to the next resistance level, which in this case for me is always around the 200, and I took some profit, and things retraced a little bit. I let it run and then let myself keep going along with the 14 SMA here. And that 14 SMA will keep me in as long as I can. If it's a huge move, it'll keep me in for that last part of the trade. And in fact, this went all the way up here. Where did it go? Right up to that resistance level we originally, at the very beginning, identified as a primary area where we want to try and get price action to go. Could I have held the trade and just let it run to here? Sure, but that's not protecting my capital, and I wanted to see if we can make this a safe trade and make it very low stress but high probability. So I hope you got something out of this. I thought it was a great trade. I was very proud of it, and it worked out really well, and hopefully you can use it in the future. Thanks, and I'll catch you next time.